heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco, this is Bloomberg Technology. Coming up, full markets coverage ahead as stocks push higher amid fading recession fears. Plus, Warner Brothers plunges after a $9.1 billion write-down. And after spending nearly 60 days in space, NASA is working on a contingency plan to bring the Starliner crew home. Let's get right to financial markets. And I'm looking at the NASDAQ 100 on a 4-day basis. It's interesting what's happening in the long run. That's actually Warner Brothers Discovery. So let's go there then. That's a nice story for the day. We're down 9.3%, 9.4%. Look, the story is really clear. $9.1 billion write-down on the legacy TV networks. And the issue with that, or the story with that, is traditional linear TV is not valued as it was when Warner Brothers merged with Discovery, because everyone's gone to streaming. Let's bring in Bloomberg's Hannah Miller, who's been covering the story. And Hannah, it's a big number, it's overshadowed earnings, and things aren't going particularly well. Give me the specifics of the write-down and the reasons behind it.
Yeah, so basically what CEO David Zaslav discussed on the earnings call was that things have drastically changed in the media landscape. Valuations are different, market conditions are different, and this is a more realistic value for their traditional TV networks. And this is a signal to other major media companies to maybe take a look at their own traditional TV holdings and see if they too are overvalued.
I want to really focus on the technology story within it, which I think is everyone went to streaming, and so they were left with properties that just weren't worth what they were at the time. The other issue for Warner Brothers Discovery, of course, Hannah, as we're now down 11% in the session, is what happened with sports rights and NBA. That was a point of discussion. Just update us on what's going on.
Yeah, so what happened with Warner Brothers was that they missed out on a $76 billion deal to get media rights for NBA games starting for the 2025 to 2026 season. They are now suing the NBA, alleging breach of contract. That lawsuit was mentioned briefly during the call, with Zaslav saying that they are confident in their position and it's in the hands of lawyers right now.
Bloomberg's Hannah Miller, really interesting story, big market move. Thank you for keeping us up to date on it. Now let's get back to financial markets and bring in Sarah Ketterer, Causeway CEO, fundamental portfolio manager, about $49 billion of assets under management. And we're trying to work out in aggregate what's going on. The NASDAQ 100's been an interesting index to track this week. The sort of anxiety of Monday faded. On a weekly basis, we're still soft at 0.8%. You've got concerns about growth. Then we got some economic data this morning that makes us feel that maybe recession risks are fading and we have a clearer picture on the Fed. When you woke up this morning, Sarah, what was your picture of financial markets?
Well, Ed, it was about the same as it was yesterday, which is reasonably optimistic. And that's a function of, again, so much liquidity added to the U.S. and global economies during and after the pandemic. And much of this is still working through the system. But we have still a very strong consumer in the U.S. It's labor's holding up, wages are holding up. There isn't a reason to panic, even though markets do that from time to time. So we're looking forward to some good earnings from our companies. And for those, for example, in technology where they depend on industrial production, to be well placed.
Thank you for bringing it back to technology. This is Bloomberg Technology after all. I mean, it's interesting you go to earnings. The story was really clear from the hyperscalers in particular, right? The commitment to capital expenditures for AI infrastructure. Maybe in Microsoft's case, you learned the lesson that you just don't miss street estimates in this environment. How selective are you being within that group of hyperscalers or other names that we're so focused on around the AI story?
Well, the AI story is like, and this has been well encapsulated on our website by our portfolio manager for telecommunications, media, and technology, Brian Cho, and that's that there are three cycles. And this first one, building, is all about the basic building blocks, meaning semiconductors. And you certainly saw that in NVIDIA boom. But the memory semiconductor stocks have had a big run too, as they should. They've had a pullback. They're very interesting. And then to your point about the hyperscalers, they're absolutely critical in the next phase, which is delivery. So we need them to build out the cloud infrastructure. And they're also, this is true of the ones that we as value investors prefer, like Alphabet and Meta, they're benefiting from their use of AI as they get more customer engagement. And a hyperscaler like Alphabet, not only do they have tremendous, they can look forward to in phase 3, the deployment, getting enterprises on cloud. Enterprise must have massive cloud access because they have so much compute needs with their data.
Monday was a global market event in the sense that it started in the Asian session, went to Europe and then to the United States. But it also shone a light on Taiwan and Korea, those markets. And when I was looking at your holding, Samsung really jumps out. You have a particularly strong view on Samsung. Explain the thesis there and where it sits in your holdings.
Well, you're correct. And Samsung is one of our, in both our international and global fund, one of our largest holdings. And the reason why is that Samsung trades at very reasonable multiples. It's trading somewhere around book value. We think it get to 1.5 times book. But they're a major player in memory semiconductors, and the need for memory as AI compute expands goes up multifold. So memory demand rising inexorably, which is great for Samsung in DRAM. They compete with SK Hynix and Micron. And Samsung's on the cusp, we think, of a major breakthrough in high bandwidth memory. So they will be able to provide the more advanced memory chips. And all this emphasis on high bandwidth puts some pressure on regular DRAM, so there's some shortages. We'd like to see this. So the supply-demand balance is very much in favor of less supply and more demand, good for pricing. So Samsung's well-placed there. Plus, in this phase 3 of delivery, they've got, or in phase 2 in deployment, there they are with mobile phones that'll be AI-enabled. So those Galaxy phones should fly off the shelf. They have other consumer electronics. They're in foundry and display. Like Samsung has it all.
It's really interesting to hear you outline that. We've done quite a lot on the show about high bandwidth memory, and that if there's going to be this ramp and expansion of AI accelerator driven growth, you have to have the corresponding high bandwidth memory. But we've not discussed it as much with the investor base. Sticking with chips, you also are interested in some of the more cyclical areas, automotive, industrial. I look at some of the names that are outside the United States, Infineon, Renesas over in Japan. Why is it that you like that area?
Well, automotive, maybe there's been a slowing of auto sales, but the SAR doesn't matter so much. It's the content that matters, chip content. And these automotive-related semiconductors, and Samsung and Renesas, Samsung German, Renesas Japan, are experts in that area. So we're expecting them to see, again, content growth overwhelm or be more important than overall auto sales, barring a recession. And we're not expecting one anytime soon. But they're also very strong in industrial chips, and to see that in industrial automation. And then think about data centers and the need for power regulation. They're both really well placed there. And those stocks have fallen some 30+% over the last 1 month in the case of Renesas. So the value is there as well. So you get the undervaluation and the growth upside. It's a great combination.
Sarah Ketterer of Causeway, it's really good to have you here on Bloomberg Technology. Thank you for joining us and that focus on chips in particular. Okay, coming up on the show, we're going to be joined by the Nextdoor CEO, Nirav Tolia, on the company's earnings, but also this overhaul of Nextdoor, the social network. Next. That's next. Watch who shares of Bumble. Have you seen this? Dating is over. The stock is down the most on record. A really severe cut to its outlook. There are some specific or idiosyncratic factors relating to Bumble and its properties within that, but it's a pretty grim look for the dating environment or app-based dating. You look at the stock year-to-date down more than 60%. It's a name that we'll continue to track. This is Bloomberg Technology. Okay, Nextdoor's second quarter revenue beat analyst estimates, and the company projected stronger than expected sales growth, pointing to improvements in the company's ad technology as a key driver of sales. And its CEO announced plans for a, quote, complete transformation of Nextdoor's core social network. Delighted to say that the CEO, Nirav Tolia, is here with us on set in San Francisco. This is interesting. Let's go through the financial stuff, and then we'll get into the platform itself. It's kind of high single digits growth on the user base side, and then you talked a lot about where the ad growth is, but just the factors behind both pieces of growth.
Sure.
Why is that happening?
Yeah, thank you for having me, by the way. It's great to be here with you, Ed. And let me just go through the numbers very quickly,
sure,
because we had a very solid and productive quarter. So on the revenue side, we grew 11% year over year. So the first time in a few quarters that we're returning to double-digit growth that we feel really good about. On the user side, over 45 million weekly active users. That represents 8% year over year growth. And then on the bottom line, a loss of $6 million, which represents 23 points of adjusted EBITDA margin improvement. So on all three of those vectors, we feel very good about our performance in Q2, and we also announced that we raised guidance for the rest of the year. So solid execution, and we're looking towards the future now for the real potential of the company.
So let's define complete transformation. You know, there's been change at Nextdoor, a change with you.
A complete transformation of leadership, yes.
Yeah, complete transformation of leadership and a return. But what is it that you think that the actual platform, we'll get to advertising, but the actual platform needs to be different or do differently?
Nextdoor has an amazing opportunity. We want to be the essential neighborhood network because we think local is so core to everyone's life. It's so important that we have rich local lives, and that is the opportunity for Nextdoor as a consumer internet company. But our potential is not reflected today in the quality of our product. So when we talk about complete transformation, we're talking about making the product so good that every time our users and advertisers visit, they're delighted. We have an extremely high bar, very high expectations, and so it seems a little over the top to say complete transformation, but we're setting our sights extremely high because we think we can reach that potential.
There will be loads of people watching the program, Bloomberg Technology audience, who might be on Nextdoor. My wife and I bought our first home in March of this year.
Over 90 million verified neighbors.
But that's my point, that we were new to a specific neighborhood and we wanted to learn about what was going on. That makes sense to go to Nextdoor. But I still look at scale, you know, compared to other social media platforms, quite small. How do you take it to another order of magnitude greater, bring in people for the first time?
It's a great question. So Nextdoor's been around for 14 years. And as I mentioned, almost 95 million verified neighbors in 11 countries around the world. So we have some good scale. Primarily, Nextdoor has been known for utility. So we call ourselves a social media product, but it's really about solving your everyday problems around local. You have a home, it's one of your most important financial assets, and you want to protect that. You want to make sure that you feel safe. You want to make sure that you're happy at home. And so Nextdoor primarily has been used around things like, I need a babysitter. I need a plumber. I want to make sure that my home is kept up to date. I want to feel safe in a crisis, whether it's some natural disaster or whether there's a spate of crime. I've lost a pet. These are really important use cases that people rely on Nextdoor for every single day. But we typically we talk about weekly active users. Now, the other social media services that you're talking about, they typically talk about daily active users. So the question for us is, what can we do to ensure that we are delivering value to our users on a daily basis? Not just lost pets and service providers and times of crisis, which are absolutely indispensable, and Nextdoor can be a lifeline, but on a daily basis, how can we make your local life better? That's where our target is.
The other part of the story being investment in ad technology sort of improving the value against that user base. Nirav Tolia, Nextdoor CEO and co-founder, thank you so much. Let's stick with earnings. Retail trading darling Robinhood extended its growth into the second quarter despite a drop-off in crypto activity. The company reporting $5 billion in net new deposits as it expands its product pipeline. Robinhood co-founder and CEO Vlad Tenev joined Bloomberg Open Interest earlier this morning. Listen to this.
We shared in the earnings call that July volumes were about 20% higher than what we reported across June. August has continued very much the same. $1 billion in net deposits in the first week. About $500 million of that came this Monday. And the overnight session for 24-hour market on Sunday night was about 3x a typical day. So 24-hour markets have just been ripping, and customers tend to be buying the dip. They're more buyers than sellers, which we think is a really good sign for the health of the retail market.
We saw on Monday morning, Vlad, as the markets kind of tanked and there was a lot of fear out there. Some of the your more traditional competitors have problems with logins, and obviously that makes customers very angry, especially if they want to get in there and buy the dip when it's at 5% and it could lose opportunity any minute that goes by. How did your technology hold up during those shutdowns at other platforms?
Our technology is strong. You know, we've made a lot of investments. We were fortunate not to have any issues of a significant nature when all of the competitors were down. And a lot of customers were actually looking to Robinhood. And we've had challenges in the past, no doubt about that, but that's hardened the company, hardened the infrastructure. And now when we see high volumes, we're ready for it. So we were happy to see customers moving to Robinhood and kind of pointing to us as one of the most reliable platforms during this recent bout of volatility.
That was Robinhood CEO Vlad Tenev. Now, coming up on the show, Joe Ben-Bevitt, CEO of Joby, joins us to discuss eVTOL expansion and that company's earnings. That conversation coming up next. This is Bloomberg Technology. Time for Talking Tech, and first up, defense tech startup Anduril has raised $1.5 billion in a new funding round, valuing the company at $14 billion. Anduril says it plans to spend hundreds of millions of dollars on a new facility to ramp up manufacturing of rockets, underwater vehicles, and other autonomous weapons. Plus, Microsoft and Palantir are set to combine their government cloud computing and AI tools in an effort to sell software to U.S. defense and intelligence agencies. As part of the agreement, Palantir will integrate its products with Microsoft's Azure cloud services and allows OpenAI implementation into tools that are meant for confidential use. And Meta sold $10.5 billion of investment-grade bonds, boosting the company's cash pile as it spends heavily on AI. According to Bloomberg data, the deal is the company's largest ever debt sale to date. Meta made its bond debut back in 2022, selling $10 billion. All right, let's stick with earnings. Joby reported after the closing bell on Wednesday. There's some important news about Dubai. I'm delighted to bring in Joe Ben-Bevitt, CEO of Joby. And I just want to get right to that Dubai project. You and I have spoken so many times over the years where I ask you, when are we going to see a Joby fly and where? And it seems like you're closer to answering that.
Absolutely. First, thank you so much for inviting me. I'm here in our flight test facility in Marina, California. It's amazing to be with you on Dubai. We're so excited. We're sprinting to across the line where we've got incredible support, a 6-year exclusive in Dubai to provide air taxi service, and our target is to launch that service by the end of next year. Really, really pleased with the progress that we're making, and again, thank you for having us today.
Joe Ben, I'm really interested in the business model long term. You know that I also take a microscope to your financials. Your losses and sort of cash burn are at pace with the street's expectations. Just explain the timeline of how that changes and when you start becoming meaningfully revenue generating.
Yeah, so thank you. We are executing exactly to plan, and we have very rigorous financial discipline. We are methodically ramping our production. We just announced that we had rolled the third aircraft off our pilot manufacturing line, and we have the fourth and fifth coming along quickly behind. We're going to have 4 aircraft in our flight test program as we're driving certification, and we've completed the first 3 stages of certification with the FAA, and we're now working on the 4th stage, where we've announced that we're 37% complete there. So as we move into commercialization, we can begin to generate meaningful revenues and reduce the cash burn on the company. So very, very pleased with progress.
Joe Ben, is America moving fast enough on eVTOL? America?
Absolutely. We have incredible bipartisan support in Washington, D.C. And this last year, we were invited to New York, where we were able to fly our air taxi in New York City from the Wall Street helipad. It was dream come true for me. I've been working on this for many, many years, and seeing the age of clean, quiet, emissions-free aircraft being able to fly in a city like New York is really exciting. We have an incredible partnership with Delta Airlines, and we're working to build with the Port Authority to build best-in-class infrastructure at New York and LaGuardia, or New York JFK and LaGuardia.
So, Joe Ben, when does that happen? The ability to take one of your eVTOL from Wall Street to an airport in the real world?
It's coming very soon. Again, we're making great progress with the Port Authority on the permitting of those takeoff and landing locations connected to the Delta hub, so you can get off your Delta flight and onto a Joby flight very seamlessly, and you can be in a matter of minutes into Manhattan. So we think this is a really exciting opportunity, and it's coming very, very soon, really paced by the speed at which we can get that infrastructure built.
Joe Ben Bevitt, CEO of Joby. Great to have you back here on Bloomberg Technology. Thank you. Now, coming up on the show, we are joined by Andrew Bialecki, the co-founder and CEO of Klaviyo, to discuss that company's earnings, which were also released after the closing bell on Wednesday. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco. I want to show you a chart that maybe you didn't know you needed. This shows normalized performance going back to 1999, with NVIDIA going in one direction in this session and Monster Beverage Corp going in the other direction. The point being that NVIDIA has once again overtaken Monster as the best performing stock on the S&P 500 this century, which is an important data point. But I'd also say this, courtesy of Dan Curtis, our terminal data editor, that think about Jensen Huang, the CEO of NVIDIA. He has a 3.5% stake in NVIDIA. He could buy all of Monster Beverage Corp and every single share and still have enough money left over to go out and buy another chip company, or even if he wanted Lululemon. Some size and scope of the scale of NVIDIA, not just its performance on a percentage basis, but how it's overtaken some of the wildest stock stories we've seen, which one of them was, until this session, Monster Beverage. Let's turn back to the earnings story. Klaviyo, the software company, reported earnings after the closing bell on Wednesday. Co-founder and CEO Andrew Bialecki joins us now for more. And my goodness, Andrew, look at your stock, up 27.25%, 35% growth on pretty decent customer growth. Where would you like to start? This is the best day for your stock since you went public.
Yeah, well, thanks for having us, and thanks to Klaviyo's around the world for a great quarter, really delivering for our customers and partners. You know, I'm really excited about the 150,000 plus now businesses that we serve. We had a bunch of great brands in the quarter, Barstool Sports, Herschel Supply Company, and we're really, what makes Klaviyo special is we're helping businesses take control of their relationships with consumers and then drive revenue. And I think when, the economic environment is a little uncertain, software like Klaviyo becomes a must-have.
So on it being a must-have, it's also interesting to look who's on the other side of the table for you. You added, in the quarter, Samsonite, for example. Why does a company like Samsonite need Klaviyo?
Yeah, so what Klaviyo's software does is we help pull all of a business's data together. So take Samsonite, one of the largest luggage travel companies in the world. We help them organize that data and then deliver personalized experiences across a variety of channels, from email to SMS to mobile messaging. And because of how well Klaviyo connects with the other systems inside of an organization, and a lot of the advanced capabilities, including a lot of the AI features we've released in the last few months, Klaviyo AI, those two factors are why businesses are choosing to work with us, because we're a revenue engine.
I like to look at geography as well, and it's really interesting that the EMEA region continues to kind of be a driver for you. Why? Why is there such engagement in Europe and the Middle East and Africa?
Yeah, so over the last few years, we're executing our strategy really well. We've done a lot of expansion into Europe, and with that, we launched our products and a lot of our documentation. We added, we went beyond English into French. We formally launched in the French region, and now we've established that playbook. It happened, we launched in Q2. We really like the growth we're seeing, and now we're going to take that same playbook and use it across the rest of Europe. And then extend that around the rest of the globe into Asia and other parts of the Americas. And what we've known for a long time is there are businesses using Klaviyo in over 80 countries. But we're trying to build a product experience that's really native to them. And so doing things like expanding our SMS capabilities. We've more than doubled the number of countries where we now support text messaging. We have plans to grow that. So really excited about the growth we're seeing internationally and in Europe in particular.
Andrew, you're a Boston-based company with fewer than 2,000 employees. What's the talent story for you right now, particularly in terms of AI and headcount? Many companies are actually cutting certain areas to reallocate to areas of growth like AI. What's your strategy?
Well, so from a technology standpoint, we are very much believers in using artificial intelligence both for our customers and for us. So we've seen good productivity gains from using AI across Klaviyo, and we invest some of our own engineering resources in doing that. But in terms of our headcount strategy, we're a global business. So we look for the best talent around the world. I know we started in Boston, but we have offices now in Denver, in San Francisco, in London, and Sydney, and we're planning to open more over the next few quarters. So we look for folks that are really ambitious. We say high slope, they want to be learners. And wherever that talent is, we want them to, come join forces with us.
Andrew Bialecki, CEO of Klaviyo, and again, Klaviyo up more than 27%, best day since going public in September. Thank you. All right, let's talk a little bit more about Europe and tech. Siemens posted weak sales and a drop in new orders for its factory automation business, though it did record a jump in software demand in the third quarter. Bloomberg's Guy Johnson asked Siemens CEO Roland Busch where the strength to the company's top and bottom line is coming from. Have a listen to this.
It was driven basically by another very strong quarter of smart infrastructure. Our electrical business grew by 21%, but we also had a very strong software business. The underlying the software business was very strong, but we also had a couple of wins, large wins. They don't repeat in that size again, but this helped quite a bit also in drive our top line and bottom line as well.
So some fairly lumpy numbers this time around, which probably aren't repeatable. You have those stuck to your guidance for the full year. Given what you've just said, given what you see in the world at the moment, how predictable is the business though right now?
Well, Yes, we confirm our guidance, our full year outlook for the growth. We will end up at the lower end, though, and we also confirm on our EPS guidance. The same holds true for our businesses. Regarding DI, we see their profitability for the full year on the lower end, for the SI on the upper end. So coming to the predictability, it's really the biggest element which we have here is that over the last 3 years, the automation business was growing tremendously fast. And this ended up in quite a bit of stocking in our distribution channels. And this stocking effect has to go down. We have to destock on the one side and the market has to pick up on the other. This is the unpredictability. How fast does that go? When will the market pick up? We see a certain light in chemical industry, also in China, which is a leading indicator, but this is not really the momentum we need in order to really grow there. Therefore, we still have a muted market for automation. It is a temporary effect, structural. We believe this market keeps on going because there's a demand for higher automation and digitalization in the whole industry.
That was Siemens CEO Roland Busch. Now, coming up on Bloomberg Technology, we're joined by Ezine Okoro, former NASA executive, to discuss the plans that are being hatched between NASA and SpaceX to return the astronauts that have been stuck in orbit after complications on that Starliner test mission. Really interesting conversation ahead. This is Bloomberg Technology. This is Bloomberg Technology, and you're looking at a live shot of the principal room. Check out our Bloomberg Technology podcast. You can find it on the terminal, Apple, Spotify, and iHeart. This is Bloomberg. Okay, so we have an update on the Boeing Starliner test mission. NASA is working with Elon Musk's SpaceX on a plan to return the 2 astronauts back to Earth in February 2025 after technical complications caused them to be stuck in orbit for about 2 months on the International Space Station. NASA is going to make a final decision in mid-August on whether to deploy this backup plan. I want to bring in an expert who knows the inner workings of the space agency, Ezine Okoro, former NASA executive, White House Assistant Director for Space Policy, and joins us now. And Ezine, the extension of that plan is that there is a crew mission going up in September with SpaceX, and then maybe the 2 astronauts currently on ISS could hitch a ride back February of 2025, which seems a really long time away. Just your reaction to where we are right now, that a backup plan's needed.
You know, the great thing about this backup plan is that we have it. Because if we didn't, then I think that there would be, especially when you look at the global geopolitical environment, I think that we would have a much harder time if we didn't have this option. So it's great that we have this option. I think that's the first and most important thing. And it's important that America has 2 options to ferry humans safely to space. What I do see also is NASA, Boeing, and SpaceX prioritizing human safety first, as they should. So that's equally important.
There is reporting out there about NASA officials or teams within NASA sort of not being 100% aligned on what the best plan was to do. As best you can, just help our audience understand how NASA works. You know, now in this era of space, we have commercial partners, you know, leading the activity, but NASA still has a central role.
Absolutely. Well, the astronauts are NASA employees. They are NASA astronauts, and these companies have contracts with NASA. So NASA has a responsibility to review and authorize decisions, because at the end of the day, the buck stops with them. And so if you step back a few weeks ago, there was a test that was consulted, and there are about 26 of the 27 jets that were fired, and the goal was to ensure that these thrusters were working properly and were meeting performance requirements. And now the team is going back and analyzing that data. So there are two reasons that could really go either way. One could say, well, we've analyzed the data and we think that this Boeing aircraft can come back with the astronauts or without the astronauts. And then there is another reasoning, which is that SpaceX is really the way to go. So either way, what you see within the agency is that there are people, and this is good when you have disagreement, and now they have a bit more time given the SpaceX mission that's going up in September to analyze the data further. And then they will make a decision based on the performance of the thrusters, the performance of this helium leak that they are monitoring. And they will make a call mid-August based on all the information they have available. And they will obviously make a decision that includes, that prioritizes human safety first, that prioritizes a safe landing, and that also builds confidence in the system.
Well, that's what I want to ask about, Esne, because we just showed the chart of Boeing's spending on the Starliner project, and it's been well reported, the cost overruns, the delays. How, to your mind, do NASA and Boeing as partners now go back out and bring public confidence in the program going forward?
When it works. And that's the point we're trying to get to, a point where it will work and there is confidence that's built in the system so that it can ferry humans. And then the public will have confidence in the system. But we have to get it to work first, and which is why the analysis of these firing tests that were conducted recently have to be completed. Okay. But NASA will not make a decision until they have conducted a thorough analysis and believe that the data provided moves them in one direction or another.
Esne, also a senior fellow at the Harvard Belfer Center. The other big piece of talk right now in the industry is China and its satellite constellation ambitions. Might they do something similar to Starlink? And if they were to, how does that work? The competition for space, the proximity of a US-run constellation to a Chinese constellation. Your thoughts on that, Esne?
What is great about this question and this scenario is that we are already living it. Before the SpaceX constellation went up, we had smaller constellations, but we still had constellations in space. And then a mega constellation was put up by a U.S. commercial company, which gave us the leverage to understand and to plan for what it would look like if a strategic competitor, in this case, a nation like China, put up constellations of their own. So through the constellation that we have up there, put up by SpaceX, we have been able to have discussions and even remediations to radio astronomy issues, to night sky issues based on what the satellites can see or what they prevent us from seeing from here on Earth. We have had conversations about orbital debris, which is the amount of junk that is left in space. And we've had conversations about space sustainability and figured out policy and engineering solutions to all of these issues. And so I think that we are actually in a better place as the United States to prepare the best we can for this constellation because we have an example up there today. If we didn't, then I think we would be in a completely different place. However, that doesn't mean that we can plan entirely, as you say, for what will happen.
Esne Uzo-Okoro, it's great to have you back on Bloomberg Technology. Thank you. Former NASA executive, and as I said, currently a fellow at the Harvard Belfer Center. Coming up on the show, Apple is working on its smallest desktop computer yet. We have that Bloomberg reporting coming up next. This is Bloomberg Technology. Apple's planning a new version of the Mac Mini that will be its smallest desktop computer yet. This is part of a broader overhaul of the Mac line with AI-focused chips, bringing in Bloomberg's Mark Gurman, who of course broke the story. And the focus here is M4 and bringing M4 in. Just explain the basic details of what you've reported.
Yeah, so the Mac Mini last revamped in 2010 under Steve Jobs. Now, about 15 years later, is getting another redesign. That's a really big delta in between new designs. And this is essentially, because of these new processors, an iPad Pro in a box. They're able to shrink this down into something that is about the size of an Apple TV set-top box, so something probably smaller than 4x4 inches. This is going to be a very popular computer. This is probably going to be marketed as the smallest desktop computer ever made, not only by Apple, but by any computer company. And this is going to have a supremely powerful chip. The M4 Pro chip is going to have even better graphics horsepower, even better AI processing, even better CPU performance than the M4 and the new iPad Pro. So this is going to be very exciting to Mac fans and coming later this year.
The ideas outlined to us by our Bloomberg sources are really interesting. What I'm trying to understand, and Apple didn't comment on the story, of course, is where the Mac Mini or Mac kind of sits within the lineup of Apple products. Who's the buyer here, Mark?
Yeah, this Mac Mini is going to be for people who want to hook up a computer to their TV. You know, there's some people who connect Macs to their TVs in their living rooms or in their office. That's going to be a big use case. But also someone who has a desktop at home and wants to do laptop-esque work, so the same amount of work you would do on a desktop, so web browsing, email, photo editing, video editing, you'll be able to do that with this machine and hook it up to any monitor you have. It comes standalone, no keyboard, no mouse, no trackpad in the box, so this is going to be a pretty modular machine.
Bloomberg's Mark Gurman with another exclusive piece of reporting. Thank you. Okay. For years, the likes of Google and OpenAI have been racing to build ever bigger and costlier AI models using a tremendous amount of online data. Think chatbots like ChatGPT, which can handle a wide range of complex queries. But some startups are now betting on a different strategy: small language models, automating a more limited set of day-to-day corporate tasks without requiring as much data. Bloomberg's Rachel Metz has been writing about exactly this. So you've heard of the large language model. Now is the time of the small language model. What is a small language model?
Small language model is kind of what it sounds like, right? A large language model is trained on a ton of data, often gathered from all over the internet and used for a range of tasks. ChatGPT, people might use it to write Shakespearean sonnets about ice cream, or they might use it to summarize meeting notes, you know, like a very diverse range of tasks that are related to human language. These small models are trained on a much smaller, more refined set of data. And the idea is that for a lot of companies, and let's be clear, companies are really the customers for a lot of these large language models. They're the ones with lots of money, right? And AI companies want them to pay for them. They're going to need them for specific things. And maybe one thing that they are really good at, something related to coding, perhaps, a chatbot that's very focused on tax prep questions, for instance. So the hope by a lot of these companies is that these models will be more energy efficient, and they will be more focused, and they will basically just be more helpful in general.
Who is leading the way in small language models? Kind of seems like an odd question, but every time a very cutting-edge large language model comes out, we cover it as news on the show. Do we have a sense of like who's focused on that area?
Yeah. So we have actually like a pretty big range of companies that are involved in this. There are a couple startups that are very focused on this. I spoke with one called RC AI. They are totally focused on customizing open source small models and so they customize them for customers, including a company called Guild, which used it to make a career coaching chatbot so they could scale up more than they could do with their human career coaches. Sakana AI is a company that's in Japan that's working on this. And then also the big tech companies have increasingly been releasing these small versions of their larger flagship models, like OpenAI recently released Oro Mini.
Bloomberg's Rachel Metz on small language models, a new term for daily use here on the show. That does it for this edition of Bloomberg Technology. Lots to recap. Don't forget to check out our podcast. You know where to find it on the Bloomberg platforms, the terminal, as well as online at Apple, Spotify, and iHeart. We'll show you some beautiful pictures in just a moment, but for now, this is Bloomberg Technology.